How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for April 17, 2018. And here is a brief snapshot of the positions held by the institutions. And why don't we get into gold? So, let's see. Very interesting week we had this week. And so let's take a look at what we see with gold first. So we were mentioning that back here we had institutions very aggressive with their long positions, and then during the time of consolidation we had them reducing their longs from being very aggressive down to levels of 223. Okay, and then from there we peaked back up with an increase in longs 223 to 259, and since then we can see those numbers have declined back down to the 230s. So what is going on here? Why are the institutions doing what they're doing, and what is going on here? So like I've mentioned, my bias is to see a move to the downside, simply because, or mainly supported by the fact that I believe the US dollar is going to get a lot stronger. So once the US dollar gets stronger, this one should have the inclination to want to drop downwards. It doesn't mean it's going to happen, but I believe the probabilities are there that the move to the downside is what's going to take place. So we'll wait and see if that's what is about to unfold. But if you take a look at the data, they're still aggressive long, but they're also aggressive short. And overall exposure to the long side is 76%, but if you take a look at the coloration of the cells, they are somewhat blue, meaning neutral, which means do not trade. And that's what I'm doing. I'm sitting on the sidelines and I'm not trading this pair. If it was to drop down to this area down here, I would love to open up some long positions and ride this to the upside. But until that happens, I won't be taking any trades on this one. Alright, let's take a look at oil. What do we see? So oil reacted off of that 4-hour demand zone down here and gave us a nice move to the upside. And so what I'm waiting for now is for price to drop and give us a momentum shift off of a daily area of demand. And if you take a look at what the institutions are doing, we can see that during this candle this move to the upside on the weekly chart, we had an increase in longs from 836,000 to 849,000, and then they dropped shorts from 129,000 to 121,000. So the move wasn't big enough to make the long exposure go up to another point, so long exposure still sits at 87%, which is big. This is big numbers here. Okay, so let me take a look here. Yeah, okay. And net positions increase from 707,000 to the positive to a positive 728,000. So you can see that they're overly long biased here. Like very aggressively long. And their short positions are pretty much cooled off. Very aggressive coloration, green, hence the move to the upside. I believe there is still more upside here ready to take place, but I think it's a little bit overextended for my liking to take any longs at this point, and the setup isn't there. The setup has already played out to the upside. Now we have to wait for a new setup. The institutions are either going to have price consolidate and then they're going to break price up to the upside, or they're going to have price drop down, regroup, get more of their long positions filled, and then a move to the upside. So I'm waiting to see if that move to the downside does indeed happen. If it does happen, then most likely a nice momentum shift to the upside is going to take place, and then we'll get the institutional trade signal to go long on this one. Okay, let's take a look at the US dollar. What do we see? So US dollar no move really on the US dollar longs and no move on the shorts, but we can see that this data represents this trading right here when price was consolidating and moving to the downside to test a daily area of demand, which I had pointed out would be the area that price was going to react to and move to the upside from. And that's exactly what we see happening here. So we take a look at this candle right here. We see that bullish pressure is coming into the market. So in terms of the data, back in right there is pre-January 28, so 31,000 longs, 23,000 longs, but 35,000 short to 25,000 short. So in future webinars, I'm going to explain to you why they would be closing off their long positions if price is low and they expect it to go higher. What we have to focus our attention on here is this though, right here. This is our focus here. Okay. Boom. When they were down here, the first touch, 35,000, consolidate, and now they're at 25,000. That's a considerable shift, right? But such a considerable shift, and at the same time, long exposure has been maintained roughly, right? 47%, 48%. But while this long exposure, or we could focus here, 55%, 52%, 53, 52, pretty much the same, but a big drop in positions. So this is telling us something. I know what it tells me, and in future webinars I'm going to break down what this is telling me and why they're doing this. Okay, but obviously we can see that bullish momentum is starting to build, and I'm expecting this move to the upside just like that. Okay, Aussie, we got that drop that I've been expecting. And so what do we see on the data? So price was pushing up here on the weekly chart right here, and as that was happening, longs were being closed out from 38,000 to 29,000, and shorts roughly closed out from 41,000 to 39,000. So closing off a lot of longs in preparation for a move to the downside. Net positions increase from negative 2.7 thousand to negative 10,000. Coloration of the cells, neutral with a slight touch of bearishness, which is that move that we're getting to the downside. Okay, I have orders to go in long here, and then I'll wait for a momentum shift, and then I'll wait for the institutional long trade signal to present itself, and then I'll get into additional positions. But I'm getting into this position based on market dynamics. I think there's a high probability that price is going to hit here and then move to the upside, which is why I'm opening up the positions. But then I want to see proof that momentum is shifting, and I want to see proof that the institutions are starting to buy before I add any more to my longs. Okay, because the bottom line is they used to be very aggressive long. Now they're cooled off. Okay, longs are below average and shorts are roughly around average. Okay, I want to start seeing this dynamic shift between the two here. I want this to creep up below average, and I want this to start dropping below average. Once I start seeing that, once I see momentum breaking on the daily chart, then I'm going to be interested in looking for the long signals. Okay, so let's go to the US CAD. What do we see? We see that long positions slightly declined, 59,000 to 58, and short positions pretty much did nothing. They added a little bit, but nothing stupendous here. So this is pretty much what we were seeing on the US dollar, right? They weren't really making any moves, and this was happening as price was dropping into that weekly area of demand, where I said I believe the institutions will start buying from this area. And we can see that this week they started buying from that area, just like that. Okay, so long exposure 77%, slightly bullish sentiment here. and it became bullish since the contract expired. They got out of their shorts, a big percentage of their shorts, and they started becoming more aggressive with their longs. And now we see why they were preparing for that, why they were doing that with their positions for the preparation of this move like this. Okay, so still going to be waiting to see how much we get a push up here, because I've already opened up some theme trades long on this one that are in profit, and going to be looking to take some profits at this area here, and then a little bit higher as well. Okay, so US dollar, Swiss franc, what do we see? We see that the institutions increased their longs. So unlike the US dollar and the US CAD, we can see that the buying pressure started to begin here. And that happened as we consolidated here on the weekly chart in preparation for the break of that weekly area of supply that I have been mentioning the last few weeks. Okay, so an increase in longs from 29,000 to 35,000, but they also increased shorts from 18 to 24,000. Why are they doing that? Is it because they know that we're going to be testing an area of a trend line on the weekly chart, a descending trend line? Well, that's a good possibility. I think there's a good possibility that we're going to see some downward momentum this coming week. A little bit of downward momentum, because if you look at the US CAD, it's hitting daily supply. If you look at this chart, it's hitting daily supply. US dollar is rubbing into that descending weekly trend line. So we could see a slight drop at the beginning of the week on the US pairs, simply because of the supply that's in control right now. So we can see the week begin with a slight drop in price, but there is no doubt in my mind that as the week unfolds, maybe even leading into next week, we're going to see that further momentum to the upside on the US dollar pairs. Okay, so, and this is confirming that for me. Positive numbers, sentiment is blue, and that means I'm not taking any trades on this one. Why? Well, we got the trend line here, we got a trend line here. So I'd rather, what I wouldn't mind is if this consolidates up here, up at these highs, and then we get a move down here, I'd be interested in taking longs right here. Boom. But we got to wait and see if that actually does set up. If it sets up, then beautiful. But we'll wait and see for that to happen. Okay, so Euro US dollar, what do we see? We see a slight increase in longs, and we see a slight decrease in shorts. And that happened as we consolidated here. Okay? Now, knowing how to read the CFTC data is always so key, because to an amateur reading the data, they'd say, well, long positions are greater than short, and they just increased their longs from 236,000 to 238,000. Okay, and if you take a look at net positions, they've gone up from 147 to 151. Thus, they're getting extremely bullish the euro. Therefore, I should be buying the euro. Okay? It's easy to interpret the data like that. But what I see here is, yes, they increased longs, and I was expecting that, because price was rallying up right into an area of daily supply. And so they need to push price up to get it to go into that area of daily supply. So this was normal to see. Okay? Because what should be the focus here is this was this 262, and now this is 238. Okay, but at the same time, 70%, 73%, staying roughly around the same. Clear indication to me what's going on here. Okay, so now we got that move that we start to see right here to the downside this week. That pressure from that daily supply, that supply coming into the market, thus causing the price to drop. And we are sitting once again right at that trend line there. Okay? So in the coming weeks, if that US dollar does retrace downwards, we could get a slight move to the upside, but eventually this is going to break, and we're going to get that push to the downside. And this is all leading right into the ECB interest rate release on Thursday. So I think this week we're going to have price consolidate here, and then the ECB interest rate's going to come out, and regardless of what the rate's going to be, regardless, we're going to end up seeing a move to the downside like that. That's what I forecast. Okay? And we'll wait and see exactly what happens, but that's what I'm forecasting. Pound US dollar, take a look at this beautiful, 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 beautiful situation here. We got a weekly bearish engulf, but this week's data represents this tall bullish candle here. And what do we see? An increase in longs and an increase in shorts. Overall, short exposure increases from 35% to 37%. Why the increasing longs? Was to get price to come up here. Increasing shorts as well because they're hedging for that move to the downside. And that's exactly what happened. Now we have a nice weekly bearish engulf right at the weekly trend line. I believe we're going to get a continuation of the move to the downside and attack that trend line with some force. Okay, US dollar, Japanese yen, what do we see? We see that longs dropped and shorts pretty much doing nothing. So just like with the US dollar, not much movement here. Okay, coloration of the cells is neutral bearish slightly, but again, I'm waiting for this to happen. Okay, waiting for the new setups to take place for me to take advantage. Already missed one trade here. There was a second setup, a third setup, and now I'm waiting for another setup to happen. Okay, and the Kiwi dollar, what do we see? Increase in longs from 41,000 to 47, and an increase in shorts from 18 to 19,000. Long exposure increases by 2 points, and this happens as price was pushing upwards. But what have I been saying? I'm expecting price to drop, and that's what we start to get right here. Last week's data. Okay, this is not a good chart to trade though because it's a mess, so I'm staying out of it, but I can still throw a forecast, and my forecast is for price to come down here to this area here and then reverse and then see that move to the upside like that. Okay, but very tricky, and I wouldn't trade it. I'm just putting it out there because my understanding of supply and demand and market dynamics is telling me that there's a greater probability that price is going to drop down here than it not doing so. Okay, so we have the euro releasing its rate this week, which is going to get the markets to move, and so I'm looking forward to that. And like I said, I believe that the euro is going to finally make its move to the downside. It's big move to the downside. Well, at least it's going to start this week. That is what I am sensing is going to take place this week. Okay guys, so that's it for your CFTC report for this weekend. I hope you are enjoying the weekend here up in Muskoka where I live. The weather has started to become really nice. The sun is out. The birds are chirping. The family is outside playing right now. So I'm going to spend some time with them. Okay? Enjoy the weekend like I said, and we will see you in the webinar, and then we'll see you in the markets. Have yourself a good one. Take care.